Can you really get rich owning a franchise? And the answer is, it depends. It depends on all kinds of things. I spent 20 years in franchising and I've been on both sides of it. I've made millions and I've lost multiple six figures in franchising at different times. So I am speaking from personal experience here on both sides of it, creating wealth and losing a lot of money.
Representing Franchise Secrets, Erik Van Horn.
All right, so the question I'm answering today is, can you get rich owning a franchise? Can you really get rich owning a franchise? And the answer is, it depends. It depends on all kinds of things, but the answer is yes, you can, because I've seen it done. And on the flip side, can you lose a lot of money owning a franchise? And the answer is yes, 100%. I've seen it done. So let's dive into it. Just for context, in case you're new listening, I've been a franchisee, I've been a franchisor, I've been an area developer or master franchise. Currently, I help franchise brands grow and scale through a non-traditional FSO that I run with my partners and strategic advisory that we have with franchising brands. So I spent 20 years in franchising and I have friends that have gotten very, very rich, very wealthy, making millions of dollars a year. And even better than that, when you're making millions of dollars a year, you have a multiple that you put on that business and it's worth a lot more. And I've seen some of my friends exit, and I've had exits, nice exits, and I've seen them double down and on the brand that they have and continue to grow into over 100 locations. And others sell and start something new. There's no right answer, but the point of it is they've made a ton of money in franchising. So I'll talk a little bit about what they've done right, where people have gone wrong and lost money. And by the way, I've been on both sides of it. I've made millions and I've lost multiple six figures in franchising at different times. So I am speaking from personal experience here on both sides of it, creating wealth and losing a lot of money. All right, let's jump into it. How can some people lose money and others just make a lot of money in franchising? There's multiple different reasons, but you've got to pick the right franchise. And are you always going to pick the right one? Is that just a sure thing that just because you want to pick the right one, that you will 100% pick the right one? No, it's not a sure thing. You've got to stack the deck in your favor. And I did a podcast just recently on how to find the right brand. And there's a number of different ways and techniques and mindsets to have as you do that, but you've got to pick the right one, the right founder, the right leadership, right amount of capital to grow. They're not growing too slow. They're not growing too fast. They have advisors like what we do at Front Street Equity. If a brand is new to franchising, they're emerging, and they don't have anybody in their ear telling them, guiding them on how to be a great franchisor, that is something that you should probably look deeper into to see, do they have what it takes to be a franchisor? Because having a business and being good at the business is not the same as being a good franchisor. They're two separate things. And I think that's where a lot of emerging franchisors get that wrong. I have people in my franchisor mastermind that are mentored by multiple different people. Even though they are not working with us at Front Street, they are hungry to learn how to be a great franchisor. So you need to understand how the franchisor is learning how to be a great franchisor. Sometimes it's timing. There's a lot of things in life, in business, that you get into at the right time and you get out of it at the right time. And most of the time, you don't know that you are doing that, getting in and getting out at the right time. Hindsight is 2020. That's how you'll know, but timing does play a factor into it. You look at crumble cookies. People got into that at the right time. If they exited at the right time, they made a ton of money. If they're still in it, they're not hurting. But the ones that got out at a certain time, are probably very happy that they did. The ones that are still in it are going to do great, I think, from what I can tell. And other people that I've seen in different business models have tried to stay in the business too long, and as a result, they lost it. They lost the enterprise value that they built. The cash flow went down. Valuations went down, went into the tank, and they did not have the right timing. You also have to be in the right market. You have to be in the right market to expand, to grow, to multiply. Like where I live in Spearfish, South Dakota, most of the time it's not even big enough for a single location of a franchise. But let's say it was big enough for one location, I could grow into multiple locations here, and that would hurt. You got to be in the right market from a customer standpoint as well. That kind of goes without saying. Let's talk about some of the biggest myths about creating wealth in franchising. Is it guaranteed? Is money, success, profit guaranteed because it's a franchise? Absolutely not. Like nothing's guaranteed. So much of being a successful franchisee is you as a franchisee being successful. A successful franchisee relies a bit on the franchisor. Like the franchisor helps, the right model, the right brand, all of that helps. But ultimately, the most successful people that I've seen, let's say it is a brand that is a good brand, not great, not bad, a good brand. The best franchisees are the best marketers, the best operational people, the best at making decisions. They are the best at just anything that takes to be a really successful entrepreneur. So that's the best piece of advice that I can give you is be a killer entrepreneur, be a great business owner. That is going to stack the deck in the favor of you doing very well and being successful in franchising. Now, with that said, I've seen some brands that no matter how successful, smart, past success, historical success of making money in franchising and just in life, a bad franchisor can just stunt your growth and you will lose money because you're part of a bad franchisor. And I've seen it. I've seen it with friends. I've witnessed it firsthand that a franchisor that is not ready to be a franchisor can stunt anybody's growth, and that means losing money as a franchisee. That's not very common out there, but that does happen. But on the flip side, you get in with the right brand, and I think about Orange Theory in over the years, especially a handful of years ago before COVID. They had technology. They had that technology advantage. And by the way, I think there's going to be in franchising, I think AI and technology in general, automation. The brands that have a technology platform, they have automation. They're doing things for the franchisees with technology. So basically, they're a technology company that happens to be in franchising or happens to be in the industry that they're in. Those are going to be winners. It's going to be a winner for the franchisee. It's going to be a winner for the franchisor. Private equity is going to be very interested in brands like that for many different reasons. Attention, franchisors and franchisees. There are two really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisee and you want to be around a community of successful Zs and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my franchisee mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com. So I think you get into a brand that is that's leaning into technology is going to be a big win. Here's something else. Is franchising really a passive income model? I don't think franchising is passive income at all. I've been super clear on this. I think absentee ownership I have not seen it work. I've not seen absentee ownership. I have not seen passive income work, with the exception of what I do for passive income in franchising, or not putting in the time into a franchise. It's called operational partners. That's the only way I've seen it done. I could do that in any business. And so I am the investor into that. I am not the operational person in that. So as long as I'm the investor and the contract's written in such a way, that's the only way I've seen passive income or absentee model work in franchising. And it's not because of the franchise. Here's the key: passive income or a passive opportunity in franchising is not because of the franchise. It's because of the way that you structure it as the passive investor. And many models won't work like that. And I have another podcast on that with some of my partners and how it works and why it works. So take a look at that episode. So I don't believe that passive income is a model in franchising. And you don't need to be a multi-millionaire. You don't even need to be a millionaire to start. It's to start. We're talking about creating wealth in franchising. We're not saying how the wealthy become wealthier, although that can happen. Franchising is great because you can start out with $100,000 of liquid capital and a few $100,000 net worth, and sometimes even less than that. But you can start out with that, and then with your own sweat equity that you're putting into a business, grow something that is pretty substantial. And here's I'll give you some stories of probably my own and some friends that have done exactly what I just described. I'll start out with myself. I wanted to open up solo salon studios in Orange County, California. The franchisor said, "Great, we'll approve you, but you don't get the whole county, and you'll start out with 3 locations," because each one was $1 million to open up. And I didn't have a deep enough pockets at that time to do any more than that. So I put together a partnership group, and I said, if we got 12 locations in 5 years that we opened up, could we secure the whole market for 5 years? And they said yes. So I did that by putting together a partnership group with 4 of us, equal partners, and we went into that market and opened up 12 locations in 5 years, just like we were obligated to do with our franchise agreement. Was it easy? No. The first year was a lot of work with all the partners, and then we hired somebody to manage everything for us. He was making 6 figures a year. He was compensated on performance beyond that, and we wanted to be pretty hands-off, and that's exactly what we did. So we had a nice 8-figure exit out of that business after 5 years. And then all of us went on to do other things, some together and some separately from each other. But we took that money, invested it into the new things that we were doing, and multiplied that money. So that was one story that I have. I'll give you some stories with friends of mine, and I won't name any brands or any names, but there's a brand that some of my friends got involved with. And they started with 1 location, and 2 of them started out in a partnership. And then 1 other started out solo. And they all just grew from 1 location to 2 to 3. One of them has over 100 locations now. One of them has about 30 locations, and one of them has, I think, just under 10 locations. And they are making, I would say, $300,000 to $500,000 per location, is my estimate. And I know that they're continuing to buy out other locations. And so one way to create wealth in franchising is to start out with one location, start a second one, start a third one. By that third one, you have a pretty good estimation of what it takes to start from scratch. Now, the guy with 100 locations didn't buy 100 territories and open them up from scratch. He started out, I think he started out with 6, and then got those opened up according to the development plan, and then started to buy out other franchisees. Let's say he bought out a franchisee that had 2 open locations and 1 open locations. He bought that out, would take over the 2 that were open, and then start a third one from scratch. So that's the playbook. That is not the only playbook, but that's a playbook that a lot of people that are first getting into franchising don't think about, because all they're thinking about is, I need to have 12 or 24 locations and I need to lock up all those territories around me. That's a lot of pressure to open up that many. What happens if it doesn't work? Because I've seen it not work with different franchises. And then when it does work, then you're opening up a bunch of them, and that's good. But what's even better is being able to buy out some other franchisees. You're buying cash flow. And by the way, most of these people are not buying out underperforming franchisees. They're buying performing franchisees, somewhere between a 4x to a 5x multiple. And this isn't just with this one brand. I see this with multiple good brands where franchisees are trading, selling, and buying. So I think that's something that is probably not talked about very often. And I think as a buyer thinking about getting into franchising, or even as a franchisee right now, you need to think like, what are my different ways to grow? I would include buying out existing locations in the mix. And one of the things that I would start doing with that is I would start like advertising that you are looking to buy other locations. I have friends that did just this. Like we were talking about it in the mastermind, the franchisee mastermind that I have, and they were saying, and we had some people come in to talk about buying out other franchisees, and they just started to implement it. The first piece of advice is tell your neighboring franchisees that you're looking to grow. And if they know somebody that's looking to sell, let you know. And that gets that conversation going, and that conversation just starts happening organically within your franchising system. And all of a sudden, you get the phone call, you get the email, you get the text. It says, hey, so-and-so is looking to sell. And then you start to see what the market is saying with these locations. Doesn't matter what the price is. Doesn't matter what the multiple is. What matters is you start to understand what these things are selling for. So if they're making $100,000 and they are selling for $400,000 and people are buying them for that, well, it's a 4x multiple is the average, and it's a performing location. If it's higher or lower than that, and then you can start to understand if that's a strategy that you want to move forward in. And if it is, start making banking relationships, or start understanding how sellers are financing parts of that, or maybe it's raising capital with friends and family. There's all kinds of different ways to do that, but that's something I think more franchisees should probably start to understand. Early on in my franchising career, about 3 years into it, is when I started to buy out existing franchisees of that franchise in Austin, Texas. And I ended up with 12 locations. Some of them I opened up from scratch. Some of them I bought out from others, and I kept them for a little bit. Some I flipped right away. I would buy it and then I would sell it within about a year to somebody else. All right, let's talk about the financial disasters. There are financial disasters out there in franchising. Some of it is the franchisees should not be franchisees. They should not be business owners. They don't know how to manage people. They don't know how to manage the types of employees that they're actually supposed to be managing in their franchising model. Some of them get into franchising thinking, I love this product or service, and because I love it, I can't wait to be in business of this thing, whatever it is. if it's cookies, if it's fitness, if it's food, if it's art, whatever it is. What they don't realize is the types of employees that they're going to be managing, or at least the operational people that they're going to be managing. If you are not going to be good at managing people and the types of people that you will be managing in your particular franchise, you're probably not setting yourself up for success. So some of that falls on the franchisee. Some other things that fall on the franchisee before I get to what falls on the franchisor is things get tight. Something happens. They don't have a good month. So the first thing many franchisees do is pull back on marketing. And they'll start making excuses like, oh, cost per lead went up. Oh, this happened, that happened. They pull back on marketing, and then revenue continues to decrease. I know this from experience because even though I can say this and I've done this the right way so many times, there have been times that I've pulled back on marketing. I blamed it on the leads. I blamed it on this. You know what it really was? It was me not managing my managers very well to understand that our front desk salespeople were not really selling. So easy to blame that on the franchisor, the location, the whatever it is, but it's me pushing the manager to make sure that our salespeople at the front desk or whoever they are doing their job. That's the reason that failed, even though at the time I had excuses and it was blaming the franchisor, it was blaming the market, it was blaming the customers. I didn't look at what I was doing wrong. And I should have known. I even had people tell me, it's your people, Eric, it's your people. And I'm like, no, that can't be, because they came from X business and they had an amazing time there. And that's a customer sales centric organization, but I was wrong. So franchisees tend to blame other things besides themselves. Again, this is just personal experience. Maybe I'm the only one that has ever done that, but maybe not. All right. So other things that impact failure, in addition to the things that we talked about earlier in the podcast with franchise brands not having the right advisors and having enough capital and things like that, is too high of startup costs. Franchisors should be pushing their vendors to reduce expenses all the time. I just had a conversation this morning with one of my business partners at Front Street Equity about one of our brands. And they were just saying, hey, we just had a conversation with so-and-so. We were able to reduce expenses by, I think it was about 20% in a particular part of the build out cost because of different efficiencies. Franchisors should always be looking at doing that, because building costs are always going to come in higher than you expect. Everything's always getting more expensive. But if you're not prepared for that, and it's a surprise, if you go into buying a franchise and you look at the item 7 in the FDD, which is the estimated startup costs, and you estimate at the very low end on everything, you're probably going to be pretty surprised of how much it actually costs to get open. So what you do is you got to figure on the high end, like what happens if it takes this much to get open? And then what happens if you spend more than what you expect, even though it might be the high end of the item 7, you're spending more than what you mentally were prepared to do. You're probably going to do this next thing: pull back on marketing, pull back on hiring great employees, paying them a little bit more, pull back on signage. You're pulling back on the hours that you're working. You start to pull back on all the things that you shouldn't pull back on if you were advising a business owner. So those are some of the things that I've seen cause franchisees to fail, lose a lot of money, or just take a lot longer to get to profitability or, exceptional profitability. So I would be, I think franchisors, one of the things that they can do is just have that long-term success focus for franchisees. Always look at cutting costs, like what we were just doing with our brands. Again, I was on the phone with all 4 of our partners today at Front Street, and we were talking about average unit volumes at some of our portfolio brands. And one of our partners says, we live and breathe and are always focused on increasing average unit volume for franchisees, driving more customers into the door, having those customers purchase more things of whatever it is. Ultimately, that and then the franchisees knowing their numbers and being able to have efficiencies equals profitability and greater profitability for franchisees. That's what franchisors should be focused on all the time. And because it should be focused on franchisee revenue going higher and franchisee profitability, how to help franchisees become profitable faster and more profitable as they grow. Long term, franchisors thinking about their franchisees long term, improving training, improving systems, improving technology, all kinds of stuff. So I think that's really important. The other thing that's really important for franchisees is finding that right location, do the market research before actually finding that location and pulling the trigger on that location. Don't get married to a location throughout the process. If the deal's bad, the location's right, but the deal's bad, you need to walk away. Walk away from $5,000 or $10,000 of hard costs that you have into it up to that point before you sign the lease. If the lease isn't going to fit your budget and what you need, it's best, or if it's the location that is not the best for you, you need to be able to walk away from that the hard costs that you have sunk into that. But do the right research, work with the experts, understand that location that you're going into. Here's another kind of comment or question that I get. Can franchisees that are really entrepreneurial, they are really strong in business, overcome a weak brand? I would say yes to a weak brand, but no to a bad brand. There's hardly anything anybody can do if it's a bad brand, meaning they don't care about franchisees. They are more concerned about their minimum royalties versus helping franchisees increase revenue. They are more concerned about the franchisor versus the franchisees. Franchisees should be the focus of franchisors. Now, I'll also say this. I know plenty of great franchisors out there that are franchisee focused. They're helping franchisees. They are doing whatever it takes for franchisees to be successful. And yet, franchisees fight them all the time. They fight a good franchisor. And the reason is because they don't know what a bad franchisor looks like. And it drives me crazy. I see it. I see how these franchisees that they're just fighting franchisors on everything when they really shouldn't be, and they're making their life more difficult. They're causing drain on the franchisor when they should just be focusing on executing the things that actually work. So I think one thing to look at is in your franchise system, look at franchisees that are successful. Look at the founder that's successful and model that. I've been in part of franchise systems myself personally, where people would say, gosh, it's not a very good franchise system. But then I would just wouldn't listen to all of the noise out there, because I knew franchisees that were doing well, that were making money and happy and making the right decisions. So I chose to focus on that and to listen to them and to model them. And guess what? Things worked out well. So, so as a franchisee, you've got to just avoid the noise. You've got to avoid franchisees that are just complaining about everything. Find out what's working and do more of that, not listening to all the complainers out there. So I think I've been pretty balanced with all of this, because I've experienced great franchisors, average franchisors, and bad franchisors. And I have been a great, good, and bad franchisee myself. So you've got to just be honest with yourself to understand if it's you or if it's the franchisor. Just in closing, if you're not strong operationally, and I would say my strength is not operations. My strength, I want more passive income these days from passive investments than I do active income. I'm doing webinars on a lot of this too, on creating a passive income lifestyle. So check that out in the Franchise Secrets Facebook group. And there'll be replays up for a long time. I'm doing this to help people. There's no charge on it. So, but it's just a helping people understand passive income through investments and even through franchising. Like I'm doing it, but I do it by having operational partners, and I am the financial partner in the operating agreement. I am not required to do anything but show up for a 30-minute meeting once a week. That's a passive opportunity. That's not a passive franchise. That's a passive franchise opportunity that I created. And I could create that regardless if it's a franchise or not. So I think if you want to really grow and diversify, you might want to think about that at some point. You've been successful in franchising. Now it's time to have your hands in multiple different brands, multiple different markets as a passive investor in different franchise opportunities. I also think one of the other things that people really need to understand is you need to understand finances. You need to understand KPIs. You need to understand financial statements. You need to have a good bookkeeper, a good CPA, because that's how you're going to be making your decisions off of the KPIs, off of financial statements, and you're going to be reviewing that stuff often. If you're saying, that's not me. I'm not reviewing financial statements. I don't fully understand my KPIs. I'm going to be doing some free webinars for franchisees on that, because let's face it, a lot of franchisors aren't focused on helping franchisees be entrepreneurs. And that's not necessarily like they're going to help in their business and help you be successful, but that's not the thing that franchisors are focused on, at least the ones that I've been a part of. Some franchisors are doing a very good job with that, but I want to fill in the gap and help franchisees out there understand KPIs, make decisions off of KPIs, understand financial statements, make decisions off of those. And I think that will help franchisees create wealth. So I hope this was helpful. This is how I've seen people get really rich owning franchises while avoiding the things that cause others to lose money when being a franchisee. Hope it helps. Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.